You're listening to The Whole Truth, a Resources Rising Stars podcast.
There's no doubt the markets are a bit soft at the moment for companies which have some great discoveries but perhaps aren't getting the recognition in the market that they and many others would think they deserve. This episode of The Whole Truth podcast looks at one of those great examples. Chris Stevens is the Chief Executive of Coda Minerals. They have a substantial copper find in South Australia, more than 1 million tonnes of contained copper equivalent in the ground, yet the company has a market capitalisation of $17 million. Why the disconnect, you ask? And that's exactly what we focus on in this episode of the podcast. Chris tells us what they have and what they're going to do to try to grow that, in parallel with having discussions with potential strategic partners. History suggests that this time of the cycle can be very beneficial for bigger companies looking to grow. You might say that puts a target on Chris's head. He's the first to acknowledge that, but he says whatever makes money for shareholders is good by him. In the meantime, he'll drill, he'll keep doing his studies and continue to try to create value for shareholders, and perhaps someone will come along and hoover it up, or they develop it by themselves or in partnership with someone else. Copper is one of the hot metals going forward, no doubt about that. Tier 1 location in Australia, already have a big discovery. It's not a greenfields exploration play. It's all there. It appears to tick every box. The scoping study was just completed a couple of weeks ago. You'd have to ask, what will it take to unlock the value of this stock? And that's what we talk about on this episode of the Whole Truth podcast. Chris, Coda has more than 1 million tonnes of contained copper equivalent metal in the ground. It's got a market cap of $17 million or thereabouts. People listening to this would say there's a huge disconnect there. What should I make of it?
Yeah, and look, it really is a disconnect, and it's a conversation I have a lot. It's actually relatively simple to explain. In June 2021, we hit a major IOCG intercept in the basement. We raised some money, we continued exploring that. And as a result of that exploration, and look, this is exploration, right? We found a lot. IOCGs are challenging. They're relatively expensive to explore. And the history, if you really look at the history of the major ones on the Gawler Craton, they took a lot more than the 21 holes that we've drilled to date to define. The simple fact is that hole was kind of a side quest. You know, we listed off 250,000 tonnes of contained, what we call Zambian style. It'd actually be more accurate to call it Central European style, but a Kufa style copper shale, which is a copper, cobalt, silver. And our hypothesis on listing was always to go and grow that resource, and grow that resource we have. So we've taken that from 250,000 tonnes on listing to over 1 million tonnes contained copper equivalent. That's roughly 800,000 tonnes of copper, 30,000 tonnes of cobalt, and about 28 million ounces of silver. And the stuff that we've discovered since listing is actually the higher quality part of our resource now as well.
So you've got scale, right? And more than 1 million tonnes, 65 odd million tonnes, you got grade 1.6%. I mean, not to be sniffed at.
No.
So if you've grown it so much, what? And I know obviously we're in a different market. You're no orphan here.
Yeah.
I mean, there'd be plenty of sort of CEOs and the like listening to this saying, well, join the queue, mate.
Yeah.
We've got a similar problem. So, but the reality is, people listening to this would say, hey, there's a new year about to dawn. We're looking for opportunities here. Copper's obviously tipped to be one of the great metals of 25, 26 ago. You look for an opportunity and you say, where is there a disconnect between what someone's got on the ground and what the market's currently paying for it? Coda would have to come up on your radar.
It would have to, yeah.
So I suppose what we're trying to get to here is, why do you think the market isn't paying more for Coda? And you could say it, as I say, of numerous companies in this state, but you do have scale, you have grade, you're in a tier 1 location. It's getting hard to pick a sort of hole in the story, if you like.
Absolutely. And the simple fact is, we got massively oversold off the back of that IOCG exploration.
You think the funds were looking for something? They were looking for another Olympic dam.
Absolutely.
We know they come along once in a blue moon, so they make a decision. This isn't another Olympic dam, so it's not for us. We're out.
Absolutely. And, I sat down with one of the 3 major ones that sold us down. I mean, Sprott and Regal publicly, because obviously there were substantial shareholder notices there. But I sat down with the funds and, the response was, Chris, you seem like a hardworking, decent guy. The base project looks very good. We only chase tier 1s. And the fund I'm talking about here also exited some of the fairly major, well-publicised discoveries.
Yeah, they're elephant hunting, basically.
They're elephant hunting. That's what they do. They come in, they come out. When you get oversold in a tough market, it becomes tough. So here's the opportunity, right?
So people listening to this, Chris, would say, right, you're ticking the boxes here, grade, critical mass, tier 1 location, metal we like, copper, that's all good. A, what am I missing? And B, does that equal an opportunity? The next part of that thought process obviously is, well, what is the share price catalyst that's going to bridge this disconnect, if you like, Chris? What turns this to into an opportunity for me in 2025?
Yeah, so you asked the question, what are you missing? I think what you're missing is what a lot of the market is missing, which is what we're focused on has got nothing to do with the IOCG from 2021, right? So I still get it. There was a Stockhead article last week talking about future copper developers, and it was still referring to it as an IOCG. This is a Zambian-style copper, cobalt, silver project that is very, very strong for a couple of reasons. The first is, we miners love to throw numbers around, right? Every presentation, every podcast, but 1 million tons is a lot of copper. When you compare that to recent copper discoveries, Marimaca in Chile, fantastic project, right? $500 million market cap, described as one of the best copper discoveries in the last 10 years. 1 million tons contained. Now it's at surface, it's close to a port. I'm not necessarily drawing any direct comparisons, but 1 million tons is worth serious.
It's critical mass, right? And you can establish a project with the magic 10-year life on the back of it.
Absolutely. It's 1 million tons. It's a significant higher grades than proximal IOCGs. The resource grade at Carrapateena is about 0.57% copper. Our resource grade at Emmy Bluff is 1.3% primary, plus the cobalt and silver credits, taking you to nearly 1.81, I think it is. So this is serious grades. It's critical mass. Not only has it got copper in it, we've got cobalt, but the cobalt's in kerolite. So it processes 90% recovery to flotation plus 95% to final product through the Albion process. And then silver's gone up from $21 an ounce when we did our first scoping study to the spot price well over 30 right now, with forecasts continue to increase. So it's gone from like 3%, 4% of revenue. With the increased recovery work we did is now 10% of revenue. So you've got copper, wonderful stuff. You've got cobalt in the best mineral form you can, because trust me, not all cobalt is created equal. And then
so on the basis of all that, Chris, you say, well, how do we get to this stage where we get some of this value reflected in the stock? That's where the opportunity clearly lies. What do you think would be a catalyst to drive that in the new year? Right.
First thing is the base project. As I said, we put out a study recently, as in a week ago, $1.2 billion pre-tax MPV, right? 802 million.
There were some pretty good numbers in there with IRR and the like.
Yeah, the IRR is well over 30%. Yeah. It's a good, really solid, economically robust project at this point. So that's the base project. Catalysts. Obviously, catalysts are the main question, main point. We have these conversations. The first is this project would be helped by a few more tons. 1 million tons is great critical mass. Emmy Bluff only has about an 11-year mine life. Now, again, in my general, having been a mineral economist for the thick end of 20 years, I tend to see 10-year mine life as when things get serious. But if you think about the net present value effect, that doesn't really kick in until 15 plus years. So what I would personally like to see out of this is about another 15, 20, 25% increase in tons. We're targeting that organically on the tenure. Emmy East, so we're drilling in the new year. Emmy East is a geophysical target. It's about 50% the size of the existing resource. And we'll be drilling that in February if all things go to plan. Everything's pretty much ready at this point. We're just finalizing drilling plans. So February, drilling into March, obviously. Open pits, MG14 within the mine plan. So again, that common misconception, this is deep. It's not deep. 250,000 tons of contained copper, a quarter of the mine plan, is in open pits. Now, more open pits also help. The great thing about open pits are obviously you can get to them very quickly. MG14 is just 15 meters below dune sand. So we're exploring for more open pits at Oakden, and we're also doing some geophysics at Canegrass. So as a catalyst, you've got major discovery potential here. You've got big underground discovery potential up at Emmy East. You've got open pit discovery at potential at Oakden, and then you've got the slightly broader discovery potential.
And as you say, you don't need an almighty discovery here. If you can increase this by the likes of 25% or so, suddenly it will change the numbers altogether. You're amortizing your costs over a much greater mine life and the like.
Absolutely. So we've already made the discovery. We went from 250,000 tons contained to over
a bit of bolt-on.
Yes, a bit of bolt-on is lovely. The second is, and clearly people want to see a path forwards. Right now, development projects are deeply unfashionable, and that is not just Coda. I don't fully understand why, but
you're in that slightly tricky phase of a mining stock where you're between the discovery and production and cash flow.
Hey, look, it's a tricky phase, but the discount on developers, and I'm not just talking Coda, is extreme right now. The one thing we know is fashions change. The second is the macro is very much in our favor as well. The biggest catalyst we could have, and these conversations are ongoing constantly in the background, is also having the right partner to take this forwards.
Yeah, that would seem to be, as you say, one of the instant shots in the arm for the stock should it come along. I mean, and given where the markets are headed, there is a lack of obviously copper exploration success. There is a lack of exploration success across the board. I think that's unanimously held view. But if you're looking to grow as a bigger copper company, coming across something that's already made the discovery that is currently not being recognised by the market would appear to put a target on your head.
Absolutely, it does. And with discount challenges, sometimes it can make doing deals relatively difficult. As the market changes, that gets a lot easier as the project grows. We've taken this from a 570 mil pre-tax NPV to a 1.18 billion pre-tax NPV. And I wouldn't bet against the team continuing to improve that. The other point about this team is you've got Robin and Paul on our board.
Yep.
They've developed 17 projects over their careers. You've got Keith, former chair of Deloitte. So one of the reasons this is a tricky area for explorers is that very few of them get the next phase right in terms of development. You've got people who've done this time and time and time again. I'm very much an M&A and finance specialist myself as well. So these next stages, I believe, will be done right. That's a major catalyst for the stock as well.
Yeah, you can say it makes you vulnerable, but I suppose that's not necessarily a bad thing. I mean, if someone comes along with a fat checkbook, well, so be it. You cut and run. You might always feel that you've been sold cheap, but from a shareholder return perspective, again, people listening to this would say, well, if someone wants to come along here and pay a reasonable price, I make money.
Absolutely, and I think that makes total sense. I don't like to see those deals where the only person doing well out of it is the CEO usually.
Yeah.
And you do see them. This has to be in shareholders' favour, and you have to take into account where you're going, the state of the market, and the current valuation of the company. But we are commercial people, and I want to see this project developed. I believe
so. Absent a bid, as our legal friends would say, absent a bid, where do you go to in the new year? What's the first couple of bits of action out in the park?
All right, New Year's pretty simple. We're drilling next quarter, so it'll certainly be in January quarter. That's, as I said, major swing at ME East, and that really is a major swing. Oakden and the additional open pits all could have a potentially very positive effect on the valuation of the project. $1.2 billion near, it's already a very strong economic proposition. In my experience, you just want to keep pushing that forward as much as possible.
Are you open to having these discussions with potential partners in parallel with this exploration program?
Oh yeah, we continue to have those discussions. I mean, we have spoken to every major group. We are still talking to a number of groups. These conversations...
So they're ongoing?
Yeah, absolutely. And I think there are two factors here. The first is that the macro is pretty scary right now. In that, you've got China stimulus, you've got Trump coming in. And if I were the business development manager for one of these major funds, I'd be doing the same as they are, which is keeping a watching brief and getting ready to move quickly when things start to change, and I believe absolutely they will. So I think there is an aspect that a lot of you're not seeing a lot of deals get done at the smaller end of town.
No, there's not. There's been a dearth of M&A, really. I mean,
complete dearth.
Yeah, when you say the smaller end of town, you wouldn't be including the great big bid for De Grey in that. You're talking these sorts of sub $100 million deals. There's not a lot happening.
Very, very little happening. And again, this is time. I always joke that this industry would do a lot better if there were more historians working in it, in that no one ever looks back. And the reality is you can see this across every major commodity as things move, as things change. You can see the deficit.
History repeats in this business like nothing else, doesn't it?
Oh, it really does. And, what happens? You see big deals getting done, and then everyone sits on the sidelines for a while, and then suddenly it's a mad frenzy and everyone's tripping over themselves to do deals. And by the last deals getting done during the cycle, they're absolutely terrible deals. Look at some of the iron ore ones done at the end of the last cycle.
Yeah, the value destructive ones.
Yeah, exactly. It's a tale as old as time. So the trick here, and this is again why I believe so much in Coda, it's a real project. It's got real assets. We've got processing plans in place. We've got mining plans in place. We're advancing the approvals. This is the kind of project that people take very, very seriously when those cycles move.
Yeah, the talk is obviously about how the cycle's going to unfold next year.
Yeah.
There's been a lot of speculation in recent weeks that M&A is really going to heat up. Yep. It's not easy to raise money to drill holes and make a discovery. Therefore, someone has already got a find. Like Coda is obviously in a far better position. You've got bigger sharks are looking around saying, hey, is now the time to hoover up some of these things before the market really gets hot and sweaty and we've got to pay 3 times as much. So obviously you're banging that space.
Yep.
And so we'll watch this with the drilling, but I think those discussions could be quite interesting come the new year.
We've got to demonstrate a pathway forwards on this project, and that is what we are working absolutely hell-bent on doing. We've done all of the technical work. That's very well in place. We're obviously looking to advance the pre-feasibility work. A lot of work that we've done, especially this last round. The scoping study update is not, sort of the way that we've updated it 3 or 4 times has not necessarily been popular. I'm not aware of another way to tell the market the economics without updating a study. But the reality is every time we do more work, we get more confidence in this mineralization, more confidence in the work that we do. The work that we've just done in the lab has completely repeated, redone and advanced our understanding of the mineralization, and processing is key to every project, let's be honest. I mean, it's fundamental. So to advance
it's the big lie detector box, isn't it? If you put it in the top, what comes out the bottom?
You got a JORC indicated resource. You've got a reasonable level of confidence in that resource. You can then get competent mining engineers to do the work. It's the processing that always gives you headaches.
The meta causes so much trouble, doesn't it?
Absolutely, and that's why we focused on that. And that latest scoping study update not only demonstrated that we've advanced our understanding, we've increased the economics materially as a result of that work. That's pretty rare. I mean, one of the reasons why people discount scoping studies is they go, yeah, but it's going to go down from here. We're going up. And again, that's, I think, a big tick for the team. We've worked very, very hard on getting that done and had a lot of success.
Well, that's great. Look, Chris, thanks very much for your time. I suspect there's plenty of people who are reading those numbers with more than just a passing interest. Those companies who want to take advantage of this downturn, the softness in the market before
Absolutely.
we get a run. So perhaps next time we have a chat, you might be talking about the barbarians at the gate. But if it makes money for shareholders, that's great.
Fundamentally for Coda, what we need to do and what we will do is demonstrate a path forwards. And again, we've talked about developers being unfashionable at the moment. Fashions change always, especially as markets come into deficit. So next time we talk, very much want to be talking about exploration success, the constantly increasing economics, and then demonstrating that path forward to proper commercialization. And again, I've said those conversations are ongoing. I'm very confident they will be successful. And projects like this, in my opinion, get built. And we will get over that discount because of the history of exploration on what is ultimately a completely separate part of the project.
Great. Chris, thanks for your time.
Thank you. Thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.